They actually don't exist.
All right, good morning, guys. Another pre-market Monday. As always, we're going to do a big picture outlook, go over some top ideas, and then we'll get into it from there. So let me share my screen. I actually had one of our scammers this weekend follow, the scammer pretending to be me, followed me. And then I had a full conversation with him, and he's like, if you just give me some money, I'll stop pretending to be you guys. And I was like, you're an idiot. You are just dumb. But anyways, all right. So getting into it again. For the 99th week in a row, talking about the 10-year, we seem to be forming a new flag and or potential topping pattern up here in this half a point range between 3.5 and 4% as resistance. So 3.5 was resistance, blew right through it. 4% is now a new psychological level of resistance. And now the prior resistance area is becoming support. So as much as I was expecting kind of more similar actions we saw last time where we kind of broke, we had this very steep uptrend, it broke and it retraced a decent amount. I was kind of expecting something similar to happen this time, where we break this downtrend and starts to roll over and fade the move. For now, it doesn't seem like that's going to be the case, and then probably kind of flag out here a little more. And given how crappy the market action has been, it's really not too surprising. So again, the bigger thing we want to really keep an eye on, and I think the bigger thing that no one has really been talking about, especially like in the media, is we're in a very obvious breakdown stage. We're obviously trying to find these bases that are forming, but if you look at this breakdown stage and the trend that we're in, who's to say that we really can't retest these kind of pandemic lows? And of course, initially in the beginning of a breakdown, it's very slow and methodical. And as you start to get, closer to those prior lows, those kind of moves speed up. And you can see that back in the financial crisis, not really with the pandemic, because it was just so quick that it was just hard to really, unless you trend every daily candle. Back then it was a weekly candle. But if we do take this low out and we do start to get some more aggressive selling and we do continue this breakdown stage, in reality, we could retest these lows. As much as I thought this whole year, especially when we were bouncing back up in the 440s and 460s, that's seemed to be the base at the time, that we would trade in that kind of 20% range and kind of flag out broadly. But for now, it seems that maybe we have to see a little bit more pain before any of that happens. And one of the clues with that is we're seeing with Telcom, they're going to be one of the first sectors to retest those pandemic lows. So they're kind of already showing us that, when we're in this breakdown stage, just like when we're in this breakout stage, they often last much farther than we think they're going to take. This whole way up, more for the broad market, we kept thinking of, what was going to be the top, and eventually it did top out. But Telcom is showing us very clearly that this sector itself can fully retrace that pandemic move. And if it comes back down to here, it more than likely it's going to have to shake this area out. It's going to be very hard to expect a perfect retest. It's going to hold this and that. Like, that's probably not going to happen. It's probably have to push even lower to really have that max, fear. And we're seeing a lot of these, major sectors, consumer staples, just broke their topping pattern. This looks pretty horrible. In the short term, like, this is nothing you'd want to buy. REITs, again, more than a 50% retracement, very close. Again, like I was saying before, we started pulling when you're near the top, it's not as dramatic, but then as you start to get closer to those prior lows, that's when that selling pressure kind of starts to accelerate. So we're seeing Telcom pretty much there. We're seeing REITs pretty close. We're seeing consumer staples breaking a major topping pattern after consolidating for the entire year. This is definitely not a bullish sign. And we're just seeing that stair step lower in all these major sectors in tech, small caps, we already went over Telcom. We're seeing the same pretty much bearish patterns where we're not getting any kind of bounces off these lows, and we have to just expect these shakeouts. And again, Dow 30, the 30 biggest companies, very obvious breakdown stage. And until we can move out of this diagonal downtrend, that's probably going to be the trend for the foreseeable future. But the thing you want to remember is these are oftentimes, again, utilities, same thing. Utilities and staples both breaking a major topping pattern, into support, looks pretty bleak. But with that being said, as crappy as these down moves are, when we do get these bounces, they are very aggressive, they are very quick, and we can get percentage moves that in a slow market in, in this last leg of the market run up is very slow, the percentage moves we were getting, because the market was just grinding higher. We didn't get, but down here, you had Boeing up 80% a week and then pulling back 50%. You had names of these very dramatic percentage moves in a very short span of time because, volatility was increasing. So these are not times to like completely panic or fear for the market. I try to articulate that in the newsletter, that it's not like get in cash and hide it in the mattress. It's, we should expect to see lower lows, but when we do get those bounces, the market doesn't just drop in a straight line, from 360 down to 220. Not how the market drops. It's going to have, the dramatic pull downs and then those kind of snapbacks. And when we can wait for those snapback moves, you can get those setups where you can risk 2 to 5% and make 20 to 30 to 40 in 2 or 3 weeks, because those bounces can be so aggressive. So just definitely being way more hands off right now. Again, not trying to force anything. Again, we want to see this base form done here, but kind of seeing all the action from these major sectors, it really just feels like this market wants to push down to this low. And given that this was like, we were, this little bounce that we got, if this was a sport buyback and we're back at lows, we would not want to be buying this again. We would want to see, if this was the real shakeout down here, this was the end all be all shakeout, we want to see a bounce at least up into this, at least to this trend line. The fact that we have this tiny little bounce here, there's just, the buyers just aren't really there yet. And we just need probably to see something closer to this line before we see a real bounce. And this is like, if we get, if we're down 280 in the SPY, that's much farther than where we are right now. But that's kind of what we're seeing, is when it looked kind of the worst into this downtrend, really where the buys were. It wasn't really, we were trying to kind of zoom in too closely. So moving on a couple of names to keep an eye on. This Deere, nice little move last couple of days here. It's probably a little bit more of a short-term swing up to this 360 area, keeping it very tight, 360 versus 350. Disregard this red horizontal line, something to keep an eye on. This CI we've been watching for quite a bit. For this 295, it tried to attempt it on last week, wasn't ready, which is good for us. It can continue to consolidate when it wants to break this 295. We definitely can be involved for that. Again, Netflix still probably not going to go anytime soon, but we do know this 250 level. We've talked about it extensively, so we know what we're looking at for that. And that's really it. Again, I scanned every Dow 30 name, every NASDAQ name, every S&P name, and wasn't really much out there, at least that I was able to find. But I know Heaven mentioned a few members had some ideas, so maybe I missed a couple things that they were able to find. So Heaven, I'll pass it over to you.
Let's get to it. First one that we're looking at is GRIN, GRIN, through 2450.
It's a little wedge forming, little flag, 2450. Yeah, I mean, it looks good.
Yeah, I like it. This is one of Kush's ideas. He's a big fan of the volatility contraction, which is exactly what's going on in this one. The ranges between the pivot highs and pivot lows are getting tighter and tighter. Eventually, it goes one way or another. So cheaper name, but really low risk because it's so tight. So that's exactly what you want to do. We say to stay away from the cheap names, usually for the reason that the risk is too wide in general. But if you can find a cheap name that has very, very low risk, where you're risking 50 cents, then it's still very much acceptable. I think this is a very nice name. Next one, GLNG. Yeah, I know Shake was also keeping an eye on this one, I believe like last week or the week before.
Through what, 27?
Through 2675, so we'll call it 27.
Okay, so it looks like Kush is big in these shipping companies.
Yeah,
both same sector. I definitely like the other one more. Again, it's
I
a
agree.
more recent IPO through the IPO highs already. So it was this GRIN, and it was GLNG.
Yes.
Okay. All right. So GRIN, but through IPO highs, not all-time highs, but definitely where we want to see the stock. It's, we talked about these IPOs where it takes a couple of years to take out those IPO highs. Exactly the case here, 3-4 years takes up the high. Now it's kind of, it's past all that pain. This same sector, same space, but been out for way longer. And just, this stock, let's go like a monthly. Okay. Again, we want to take into, this is a monthly chart. This is nearly 20 years. This name has not really spent much time above $30 a share. That should be probably more of your bigger clue. This is, we don't want to think this is going to happen. Once we get in, it's been 20 years that has been setting up. Don't think that it's going to break 28 and run back to 60. So I would, of these two, I'd definitely focus way more on this Grin that has a lot more going for it than this GLNG.
Agreed. Next one, a lot of people have this one on watch, PTCT. Been talking about this one for a couple weeks.
Let's get rid of this weekly. And what's this through? What, like 53?
Through 52.
52?
Yeah.
Yeah, I mean, again, market's been getting pretty banged up. So finding anything that's actually flagging and holding up, definitely a good sign. This 45 was amazing. This was,
Yeah, that was a really nice breakout.
that's like, so we're talking about bases. This could not be, more perfect base for one to find.
Yeah, textbook move. This is a great example of because I have obviously a lot of people going through the training and all that kind of stuff, and they post a lot of charts, and like let's say for example they're looking to buy through 45 in that mid-July, but before that consolidation happens, right? And that's where it becomes an issue, because then the problem is that it's very likely that those previous arrows that you just drew out, it happens like that. So you have to wait for that. This is a great example of like being patient and waiting for that tight consolidation at a major level after it's been tested multiple times before. Now you have a low risk probability trade, low risk trade. And, you get a nice breakout risking $3, you make 10,
Yeah. So that's it. Like even this risking $3, super, super tight again. When it was flagging up here, like trying to buy it after this move, I know could not be the most thrilling, but that risk is just the key part of it, where that's all you got. So this is $3 risk. This GLNG, buying, 27, you're risking $3 here. You're risking more. You're risking the same dollar per share in GLNG, which would be far more percentage wise.
Double
10% here, where you're not going to really get $10 out of this name, where this PT, risking $3, you do get $10 out of it. And that's why it's like, if you have these ideas, you got to narrow them down where it's like, okay, Grin, 50 cents risk, can we get $2-3 out of it? Probably. GLNG, risk $3, make 10, probably not. PTCT, in this example, you did. Now it's buying 52 or 55, which is a little bit different, which traders might need to develop a little bit longer. But when it wants to go, it definitely wants to. So it's just waiting for it to tighten up and find that right entry.
Yeah. Next one you got on the list, CLR 71.
Okay, so one thing I was saying with energy, one of the big picture ideas was to basically take profits in energy this week. We saw this wedge breakout, but we have to also remember that this is basically we're going to count this as 1, 2, 3, 4, 5, 6 days up into major resistance, starting to see a little bit of selling up here, some profit taking. I think it's way smarter to be taking profits 7-8 days up than looking to initiate a position in an energy name. This is an oil name. Again, this stock went from 62 to 70. So percentage, I don't know.
About 10%.
Yeah, so about 10% in a week. It's just late. Macro wise, yes, I definitely see what he's looking at here, but you need to be in this. We haven't really been getting paid this year buying the breakouts, and we need to you need to wait when they come into support, get into this pattern, and you need to be buying up to 65 or at 62, and taking profits into this and holding some if it's gonna break. But I think if you're buying anything energy wise this week, I think it's just gonna be very costly. I think it's way, all those energy is way too extended.
Yeah,
Like the, you know, if you're trying to buy Exxon up there as 104, it's like you're shot. I'm not saying the person who wanted to buy the CLR wants to, but you can't be buying up here. This is profit taking area.
yeah, I'm with you there. Dino is the next one, DINO through 5850.
Yeah, so same thing. This is a retest, again, energy name, taking profits, just retested its prior high. This is, you're selling up here. Again, in time, sure, in a month or two or a couple weeks, but if you weren't buying like this, again, 49, buying 50, anything down here, you know, you're buying anything down here on this way up, selling into this, amazing. Trying to get in now after that move, you're just asking to lose money.
Yeah, that's actually, it's tested that level multiple times if you zoom out. So it's not the first retest, but still it's, you know, it should still be treated like it's just recently retesting and it needs to consolidate or pull back, put it in a higher low and give us a better risk reward trade.
100%.
Abby had a few on her list. She's looking at HUM.
Her favorite name of the year.
I would say Tesla's number one, but HUM number two for sure.
Yeah. Not, you know, what you looking at in humanity.
Yeah, through 504.50, you know, consolidated last week while the market sold off. If we get a bounce, I think that could probably push. I think it has
I
earnings.
mean, she definitely had like a good read on this name this whole year. Definitely this thing is just holding near 52-week highs, not giving a second thought of what the market's doing. So this is definitely, as he said, if the market does bounce, it's definitely gonna be the first name to go. But it's just picking like that, you know, it's tough. It's all like, right, you know, 504, 507, you buy 515. Does it retest 515 and stay within this range for the next few months? You know, those are like the $1 million questions here of like, what does this humanity do? But again, she's had a pretty good read on it, so that's her game plan.
Yeah.
Maybe
Next
maybe
one's-
if she's keeping it maybe tight versus a low a day for like a momentum move, or if she's gonna be more patient with it.
Yeah, maybe. It's tough to imagine a big momentum move out of a company like this, but I mean, if this market has told me anything, it's taught me that anything is possible. So we'll see. Next one she's looking at is CI, Signet Corp, through 291 and then 296.
So I don't think that 291 is necessary. I think that entry is, again, I think we do this, and that was what I was trying to talk about in the big picture, where when we miss these up moves, like we miss we miss this trade, right? So we miss this support buyback, runs the resistance, we're like, damn it, we missed this part. I want to get involved as it pulls in. The problem that most have is that we expect, just because we want it to pull in and turn, that it's going to do that. But more likely, it's probably going to fade, maybe even shake this low out, which is not even a thought. It's just going to hold here, it's going to turn right back up, it's going to go to 350. When in reality, it's probably going to do something like this again.
Yeah.
Before it does anything like this again. So I don't think anything is significant about this high a day. You have a doji of indecision, you have doji of indecision again, in a wider, not a wide, 10%-ish range, maybe 8%. I don't think you need to buy here. I think this 295 is very clear. We've seen it couldn't break, tested it, could not break. For the extra 1% to pay up in this name, I would much rather almost go full position through 295 than getting ticked in here and it coming back to 280, stopping you out, and then you not wanting to buy it when it's a month later and it's right here in November and it's going. So that's that, like, that pullback. There's nothing here that's worth this, you know, it's not worth the effort.
I hear you.
Wait for this.
Yeah. Link in the chat actually just posted Wolf, WOLF in time. He didn't really give a price, but I'm assuming probably through that like 120, 125 area eventually.
I've actually never heard this name.
Yeah, me neither. I mean, I've seen it. I've typed up the chart, but I've actually never looked at like the company. It's a semiconductor, but I don't know much
Yeah,
about it.
I mean, definitely looks, reminds me a lot of Light.
Oh
Right
man,
there.
light. Yeah, that's 60, light 60.
Yeah,
I remember
feel like-
light 60.
Yeah. But yeah, I mean, definitely, again, the earnings gap up's holding,
Hmm.
for how weak the market's been. This thing really doesn't care. Seems you probably, as I mentioned in time, probably have to definitely wait until after earnings again. And maybe that's what pushes it through. It had a good earnings report last quarter. Maybe this is the catalyst to push it through this. It's pretty much a base, big base, big bull flag. So definitely one to keep on the radar. It's very good. To that,
Yeah,
that 120.
Yeah. Next one is HII through 235.
Yeah, it seems like 240. It seems like this is like the range right now. 220, 240 seems to be the range. It's kind of just dead smack in the middle.
Yeah,
Definitely see, again, kind of see who's looking at, or whoever's looking at it. But this seems to be the range. When we're trading ranges, you want to buy up off of support, you want to sell into resistance. That's kind of the move. Dead smack in the middle. If you were in it already and you were adding and then selling, I'm with you there. But I think if you're just initiating here,
yeah.
it's kind of
Coin
that
flip.
coin. It's a coin flip, yeah.
Yeah.
And sometimes you got to take a coin flip, but I don't think we're in a market where coin flips are what we want to be looking at. I think you want to be
You want to be
extremely,
sniping. Yeah, you
extremely specific.
right.
with
Selective,
those ideas.
specific, and just entering in the right spots, and then trading the patterns versus trying to trade breakouts or breakdowns. Next one, team. I haven't traded the same in a long time. Team 210. I think that's either a typo. Maybe I got it wrong. Let me go check because that's. Let me check. Abby. Sorry, 240. Yeah, that makes a lot more sense.
I don't know. I think it's just a tough name right now. 240.
Seems a little random. I don't know.
Yeah, I don't know. I think it just seems tough.
I think 300 in time is probably the simplest thing to say.
Oh,
you
okay.
know.
Maybe she's looking.
I see the wedge there, yeah, but I don't like I mean, personally, I don't like playing these wedges when the stock is heavily downtrending.
Mhm.
You kind of want to see a wedge when the stock is trending up, which I guess from lows, like recent lows, it is somewhat uptrending.
Mhm.
But I don't know. I mean, personally, I think it's just like through 300 in time, it's probably the better move.
Yeah.
But I could see it if it tightens up a little more. I think if it really tightens up and makes a really big inflection point, like right there in like a week or two, end of October, plus with earnings soon, I mean 10 days, that might be the catalyst to push it. I mean, if it has a good reaction to earnings.
Yeah. If this is the pattern she's looking at, and it's going to tighten up in here, she's probably going to find a tighter entry or a lower price entry than 240.
Yeah.
But again, it's like we're like, or it's like that. This wolf, like this looks amazing. CLR.
Grin was probably the best one so far of this morning.
So it's
Yeah. Next one for market opens here, we got PGR, progressive, through 123.
120. So again, we talked about this one, I guess it was August, where the member wanted to buy through here, which it actually did go. But again, the overall theme that we were trying to articulate last time was just when we're trading these ranges, it's buying up over support, selling into resistance, trying to hold some. So this is the same thing here. This PGR, it's like you need to really be. I mean, you got so many lines in here, give it all this stuff. If this is like the short-term range, we're going to say this is like probably the bigger range. And I'm trying to make this visually easy. Red is where we want to be selling. Green is where we want to be buying. So you want to be, buying up off of support here, and then trying to sell into resistance up here. buying right here again, this was a 124.
123, yeah.
Yeah, it's like
123, 124.
you're kind of dead smack in the middle of that range again, just like what was that? Is it- I forget which.
HII, I think, or CI.
Oh, I
one
might
of
not
the
have
two.
added it on. Yeah, it's
Yeah,
like an HI. It's like dead smack middle of the range. When they're flagging in these bigger ranges, we need to be buying the ugly when it turns up, selling into when it looks amazing. Like for PGR, in that example, it was like, wanting to buy here, it was already up 8 days in a row. This is kind of like trying to buy energy up here. Could it have another leg higher? Maybe,
Mhm.
but more than likely, if we took 1, 2, 3, 4 examples, 3 of the examples, we'll say energy in this example, pulled in, one time went higher. I don't want to be in the camp of I want to buy something in the middle of the range when 3 to 4 times it's not gonna
Yeah.
push higher.
Next one, MTB 184.
Okay, some regional banks. Okay. I mean,
Cooler setup.
yeah, I mean, so in time through this 200 is definitely going to be this is kind of like earlier this year when Abby was talking about Humana. It's like through those highs is probably when you want to get involved, but then there is some shorter term trade in the meantime. So again, it's like for now, we're probably not going to see MTB above 200 in the foreseeable future. Eventually through 200, it's going to be an amazing trade. Right now, it's just that run up to 200. And that's like that magnet or the upper area resistance that the stock is going to kind of drift towards. And it's just trying to find that entry. What was the entry for MTB?
184. So sort of like a low cheat, I guess, above
Yeah.
Friday's high type of thing.
Yeah, this is like that. We talk about with one of Abby's examples when there was like pulling in. Was it CI? Let me just see. Yeah. All right, let me just add it to MTB. So like that was like her entry here, where it's just wait for 295. Like you don't need to like rush into this pullback. MTB is kind of the same thing. Like okay, indecision, selling off. Yeah, okay, if you want to buy above that, but more than likely, it's probably going to need to go more than just this little 3-day pullback for any substantial next leg higher. So I would probably keep a closer eye on, like, I'm going to set alert here. And if it shakes out this area and then turns back up, you'll probably get a tighter risk entry here, like shakes out, turns back up versus buying here and then hoping it continues that uptrend higher. Also has earnings in a
9 days.
about a week and a half. So probably just wait till after earnings anyways. So you don't need to trade too perfectly.
By the way, quick tip on knowing when earnings is. If you look on the right, to the right, like right under the watch list, MTB to the right, little square that says 9.
Oh yeah.
There you go. Next
Oh,
one.
that's like the amount of days until it reports.
Yeah, it tells you how many days.
Oh, that's actually really cool. 24.
Look at
Cool. Learn something every day.
that. Next one. LHG, is it LGH maybe? She put LHGG in the chat, but I don't know. Looks like it's not coming up. So let's go to the next one. ZS180. Z is in zebra.
ZS. ZS. Am I cracking up? Oh, there
ZS.
we go.
Yeah, there you go.
180.
Yeah.
So this is not a good base. 180 definitely see. Yeah, I mean, I definitely see the base. Yeah, it's just a tough area. This is like a big breakdown. But I mean, definitely it's pulled in quite a bit. So
Mm-hmm.
you definitely want to keep on the radar if you can keep it tight. Not my favorite setup, but definitely see what.
Yeah. And then last one here, as market opens, ALL, Allstate through 134.
And so like this way more. then that's the scalar, 134,
Mm-hmm.
134, 140 is probably gonna be a big bluish sky breakout. So again, that's, through this 134, this is kind of gonna be your short-term best case area of what you're gonna get to. So if you can find an entry where you can buy through 134 and expect tick profits in 140, you have to just, you gotta be super tight. So if you're giving it versus this low 128, it's probably a pass. It's gonna be 1-to-1. But if it can tighten up, you can versus $1 or $2, then it could be worth something. But definitely want to keep an eye. This looks, that 140 looks amazing. Again, this 133, 134, very textbook base, just like that. Whichever it was, that one we're talking before, we had like that tight base for a few months and it broke out perfectly. Definitely good base. You just need to find a tight entry because in the short term, this is going to really be 140, even 144. That's going to be kind of your best case
Yeah,
profit taking area.
and that's all we got.
All right, guys. Well, thank you guys for stopping by, and we'll see you next Monday.
Yes, sir. See ya.